So hello guys, welcome to Nifty 100. So in this video I'm going to teach you how to use open interest for Nifty day trading, swing trading, or etc. So that you could have like maximum profit and minimize your loss. So one of the basic reasons you lose money inside the index or in F&O is because you don't have enough knowledge, or maybe it's due to your impatience, or maybe it's due to your lack of experience, or whatever reasons. So that's the reason why you lose most of your money. And I know a lot of people who are watching this video must have gained a lot of money as well as lose a lot of money. So the main thing is like you still have time, you still have a lot of time to change what is going to happen next, and you still have time to earn a lot of money from Nifty F&O trading on a daily basis. So one of the main reasons you lose money inside Nifty is like you don't know when to buy, when to sell, and like what is happening, who is buying, who is selling, and what an open interest is. So I will just teach you this with this basic video. So in this Nifty chart you can see like some like that. You could see a lot of resistance and supports here, and you must have wondered why it like goes like this. At first it comes down, makes a support, then it goes up, then it comes down, goes up, comes down a little bit, then it goes up. So you must have noticed why this things like this happen. And another reason which you have lost money in Nifty day trading is due to time decay. So for all these things there is a solution, and the solution is I'm going to say through this video, and I will make sure that you won't lose any money after this. Okay, so let's go to the video. Okay, so I will teach you some basics before going to the open interest. So as I have said before, most of the option traders lose money despite market direction because they don't understand who is buying, who is selling, and the role of open interest. So in this video I'm going to teach you how to successfully trading. So let's get started without wasting time. Okay, so in option interest, in option trading there is two kinds of people. Okay, first is option buyer and the second is option seller. So open buyer is simply people who purchase a call or put options and wait for the index to go up like 50 or 100 points, and wait for the index to go down 50 or 100 points, or how much points, whichever points you want. So that is what an option buyer simply means or refers to. And I would say I'm also an option buyer because I have like minimum capital, and I buy call, put option, and wait for the market to go up. So what I really want as an option buyer is I want quick directional moves and are exposed only to premium paid as risk. So what it really means that if I am buying a call option, the only risk I'm bearing is losing the premium. That's the only risk I'm doing. So if I put stop loss, then I'm not going to lose a lot of money. So what I'm going to lose is only the premium which I am paying to buy the call option. So for example, if I'm buying a call option, which means I want the market to go up, that is what I'm simply pushing for. Or if I'm buying a put option, I simply want the market to go up. That's what I'm wishing. For example, recently like in March, April, something like that, the market has fallen and like to 23,000 or in that range, 22,000, 21,000 range, and I think a lot of people have gained a lot of profit because we all have bought put option because the market fall. That is what it means. So when we are buying, or when we want to buy something inside this market, like if you want to buy call or put option, you should always looks from the seller's perspective. So an option seller receives a premium by selling options. So the seller benefits from market stability or sideways movement, and are often experienced or institutional traders. So selling a call option suggests the seller doesn't want the market to rise, and selling aim to profit by time decay and limited market movement. Okay, so what it really means that, so if you are going to buy something, like if you are a option buyer, then you should always see from a seller's perspective. Okay, so what it does is like an option seller sells the option, and they benefit from like even from the sideways market. As you all know that in Nifty or in Bank Nifty or Sensex or like that, most of the time the market will be in sideways, and we might not be able to trade, but always the big players, the option sellers are known as the big players, they always gain the money despite what the market condition is. So what it really means, does it mean like only the option seller can win always? No, it doesn't mean that the option seller can win always. They can also lose money if they are inexperienced or anything, but 95% of the time option sellers are going to win. Why? Because they have money, they have more money, like lakhs of or crores or rupees. They have money to trade here. But just look at this, we only have like few thousand, like 10,000, 50,000, 60,000. These are like very small quantities compared to what the big money the option seller has. So we should always think from option seller perspective, and we should always act according to that perspective, even if we are going to buy call or put option. So you must have like noticed, like, or you must have wondered like how they are going to get money. So you must all like known that, or you must have like seen inside the market that, for example, if you buy a call option and the market like goes up in your favor for like 100 points, then after that it goes like 50 or 200 points down, then you must have like lost a lot of money. For example, if you buy at 20 rupees, when it goes up it can become like 30, 40 or 50, but when it goes down, like it can become like 5, 10 or even 0. Why? Because these are time decay, and these big players, they get money, or they get benefits, and they aim profit by time decay and limited market movement. So even if the market doesn't move like 100 points or like 150 points or 200 points, the sellers will get profit. So that is what going to happen. So these things that option buyer safer, these all are, I have said like in some few minutes ago. I have said all these things. Okay, if you want, then you can just read this, and if this video is watching by someone who knows or who has like proper market knowledge or anything, then you could just skip this part and you just go to the main part where I show the charts, etc, etc. Okay, so let's understand what an option interest refers to. So option interest refers to a total number of option contracts that have not been closed or exercised. It indicates the level of market activity where buyers and sellers are active. Here, open interest typically suggests a greater presence of sellers and can highlight significant price levels where market sentiment is rising or is strong. So if you are a buyer or something, you just for this basic video I'm not going to extend it. So for this basic video I'm just saying only the basic things. So you just simply like note this thing. If the call open interest is high in a specific strike price, it acts as a resistance, because the big players or the call sellers doesn't want the market to go beyond that level, so it acts as a price ceiling. And high put open interest indicates the sellers expect it as a support, so it means that they don't want the market to go below that level. So by this way, an option buyer can mark their resistance as well as support. Okay, by this way an option buyer can mark the resistance and support. So I will go to maybe sensible chart. So I personally use sensible because for me it's so easy to understand, and everything is there inside the sensible. So if you want to access like Nifty or Bank Nifty, Fin Nifty, Sensex, then you should maybe go to like buy the premium version. So as I'm not doing this from my main account, I'm just right now doing this for a demo purpose, so I haven't taken any subscription or anything. If you want, then you could just take it from sensible. So just look here what it really means. I will teach you. I think so. You see, in sensible, the call open interest is denoted or shown by the color red, and the put open interest is shown by the color green. And this can vary with various apps. For example, in some other apps, it can the call away can show it as like blue or green. The put away can show it as like red or whichever color they prefer. So this is a chart of Reliance. As you might have known what Reliance is like. The Geo Mukesh Ambani's like company. So they also have option chain, and they also have like open interest chart. Then you could just search it here in whichever company or whichever stocks or whichever indexes which you want. So here what you can understand is like here the call OA is like 98.3 lakh, put OA is 15.8 lakh, which means call sellers are greater than put sellers, so this act as a resistance. So once you understand what a resistance is from the open interest chart, then you should go and mark inside your Nifty or Sensex or Bank Nifty chart. Then you should mark that main level. Okay, and just see in this position, just see the put OA is 11.6 lakh and call OA is 5.15 lakh, which means this can act as a support. Because why? Because the put sellers are more than the call sellers here. You can see, look. So it can act as a support. So in Reliance there is like there is not much like a big support or something like that. If you go and check it on Nifty or Sensex or Bank Nifty, then you could see a large resistance somewhere here, or you could just see it. So what really happens, I will teach you. So if you want to know how these things like the market is going to change, then you could just like click on this thing, show OI change. So you could just see what the big players are doing and what the retailers are like, how the retailers are getting trapped. So, or you could just go to here OI change. Then you could see here, look, the call OI is increasing, which means the call sellers are increasing their position, so it acts as a support. Here, look, the put OI, the call OI is decreasing like significantly, so it doesn't work as a support. Look, that's why the Reliance stocks price comes till 1560, you know. So what really happens is, right now Reliance is at 1556. So once it breaks this level, I will show you this level, then it can go up because it acts as a support, it acts as a resistance. So if you want to see how the resistance is changing, or will the resistance breaks or something, then you could just do the open interest change, OI change. So for that you should use last 5 minutes, so you could get updated so quickly, like what is going to happen so soon, etc, etc. So you could always do like this, always refresh 5 minutes. So like that you could just see it. So this is a very basic video. So if you like or understand what I'm teaching, then please subscribe and like. So if this video gets a lot of views and likes, or if you want more, then you can just comment it down and I will teach you more basics and to advanced level if you want. So please help me to grow, okay, so that I could just teach you a lot more. Bye.